Shawn Beecher, who is the senior analyst at Market Traders Institute, is joining us for Currency Matters. This is a segment that we do every week, and Shawn does a great job at it, and the guys at Market Traders Institute are always in the know when it comes to global currency markets. Shawn, welcome to the George Jarkesy Show.
Hey, George, how are you?
Fantastic. When you talk about what's going on at the Fed, what's going on with interest rates and sort of promises there, can you give us sort of an overview of what's going on with the interest rates and currencies this week, not only here in America but overseas?
Yeah, once again, you nail it. I mean, the market as a whole is kind of reeling from the mixed messages that the Fed delivered yesterday. Basically, what you've got is Ben Bernanke, who's come out and stated that, hey, look, we are going to keep our interest rates at or near zero up through 2014. And the logic behind this is if you keep the interest rates down in a country, it should increase borrowing. Borrowing should, in turn, increase spending, create jobs, and help grow the economy. The problem lies in the fact that the justification for leaving the interest rate seasonally low is basically, hey, look, the economy is not doing as well as we would like it to do. And this is really something the Fed's been having to go back and forth on over the last couple of months as we continue to get, mixed but slightly more positive news. And I think the thing that really kind of put most investors over the edge yesterday was how the Fed in one breath is going to say we're going to leave interest rates low, meaning that that the economy isn't doing as well as we'd like. However, we're going to also revise unemployment numbers down from an expected 8% unemployment to 7.8%, which would imply that the economy is actually starting to strengthen. So I think it was that back and forth that's really created some questions in some uneducated traders' minds.
Yeah, those messages are very mixed at this point, and we continue to see mixed data. You have negative housing data. You've got jobs data that is somewhat questionable. You've got the CPI data, the consumer data that's not very, that doesn't look that well. So you've got a lot of mixed data out there that's, frankly, got everybody kind of going sideways here, as we move forward. Well, tell me, how is it that Market Traders Institute right now is advising their clients and members of Market Traders Institute?
Sure, and great question. One of the big ones that's coming out is Advanced GDP tomorrow comes out, and that's quarter over quarter. So we're going to get our first snapshot at what the U.S. economy has done in the first quarter of 2012. We're going to get our first look at that at 8:30 Eastern Time tomorrow. What Market Traders Institute is really doing is, there's a lot of different methods that you can use to trade any market. What we do at Market Traders Institute is we try to identify the easiest money that's out there. And I don't want anybody to think that I'm telling you, hey, look, it's easy to do, but I'm trying to make sure that each and every one of MTI's clients understands that what you want to look for is you want to look for an instance where you have a very strong currency versus a very weak currency. And that kind of brings me to what's taking place this evening in the Japanese government, Japanese monetary policy meetings that are going to take place this evening. What Japan is doing this evening is basically coming up with a monetary statement, and it's widely recognized by most economists continue to kind of follow the path that the U.S. has blazed with our quantitative easing or asset purchasing that we've been doing here in the U.S. What we see this as at Market Traders is an excellent opportunity to be able to take advantage of not only some of these Japanese yen currency pairs, but especially the ones where you're pitting a stronger economy versus a weaker economy. And while fiscally we may not be able to see it as much, on paper, I anticipate the number tomorrow for our GDP quarter over quarter to come out, again, maybe even more positive than what the average analyst is expecting. What you'll have is a strong U.S. dollar versus a Japanese yen that is purposely trying to devalue itself. So here we've really been making sure that all of our clients are aware of the trading opportunities that are there between the U.S. dollar and Japanese yen currency pair. Huge trading opportunity there.
Well, it's interesting that you bring that up. I was talking to one of your traders over there, and I asked the guy. I said, look, the guy's name was Jamie, and I asked the guy. I said, tell me, how long you been trading? And the guy says, well, I've been trading about 5 or 6 weeks. Mm-hmm. And I says, well, how's it going for you? And, boy, he got kind of a tough thing. And he says, well, it started out really bad. Mm-hmm. And I thought this was going to be a pretty negative story. He said it started out really bad, and then he says in the last week, because of the hand-holding and the guidance that he got from Market Traders Institute, not only has he made up for the losses during his learning curve, but he's actually in the black and making money. Mm-hmm. And he basically said it's a very tough market. And to go it alone without that guidance, that he wouldn't, that he would have basically hung up his spurs and gone and done something else. He wouldn't be in trading only after 6 weeks. So it's very interesting that in that short period of time, he kind of beat his head against the wall, got your data, got on track, and then made money. So I find that's I think I have never traded currencies through traders we have, but I've personally never traded currencies because I don't have that hand holding component and frankly the time to watch that. But I know that a lot of your traders trade at night when they get home from what they do in the day, right?
Yeah, absolutely. I'm actually really familiar. Jamie's one of the many success stories. One of the interesting things about Market Traders Institute is what we have a tendency to do is we'll take on a new client. And when we take on that new client, the first 2 months for that client is such an eye-opening experience for them because, many of them have a lot of trading experience in other markets, but and again, nothing against any of them before they come to us, but when they come to us, there's such a level of clarity. What we really do that's special is we distill all of the information that's out there down into what's relevant. And, it's funny that you mentioned Jamie. I'm actually going to have a conversation with him tomorrow, but he is just another one of the MTI success stories that's out there. And one of the things that I love about him, he's one of those everyday average people who didn't come to us with a lot of trading experience, but had a desire to learn, really had a passion for education and realized, look, this is a unbelievably high profit potential market. So really, what you said about Market Traders Institute with you in the beginning of the process, the middle of the process, the end of the process, we're one of the few educational organizations that exist anywhere on the planet where it's a lifetime education, and we're with you that entire lifetime. It never expires. It never runs out.
Well, I got to tell you, what also gives me a lot of confidence is the fact that you guys have been in business doing it for 25 years. That's in the trading business, that's like dog years. That's like 150 in dog years.
Exactly.
Years ago, I had a friend of mine, and him and his wife got a divorce, and I was actually friends with both of them, and she left the marriage with quite a bit of money, and she went down. This is in the probably late 90s or maybe early 2000s. Put $1 million in a day trading equity account, and she lost $1 million in like a week or two, right? And I just couldn't believe how much money that was that she lost. And had she had a group like Market Traders, that probably wouldn't have happened. Well, listen, we're going to go to break. Thank you, Shawn, for being on today, and we look forward to Currency Matters next